The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. 9:06 a.m. We got a lot going on, folks. I'm just getting my screen set for this program. We get the S&Ps right now down 94 points. That's 2.23% in the red. That's about 20 points at least off of the lows as well. You get the NASDAQ 100. We're down 2.8%. Putting this back, that's a weekly, folks. You put it on a 15-minute, you are catching a little bit of a bounce. We're more than 100 points off of the lows we had at 2 in the morning, and you back it up to just 8:30, and you were trading at 13,034, so more than 100 points off of the lows. I'm not calling it a bounce, folks. I'm just saying things were a little bit worse not that long ago. You get the Dow off 700 points right now. That's 2.2%. You were down more than 800 points at one point, almost 900 points at one point in the Dow. Russell off 2% as well at 1902. Man, we got some action in commodities out here. Talk about action. Crude, there's $100 for you. Just yesterday, end of the day, $91. This is what war between Russia and Ukraine looks like, folks. You jump over to gold. A lot of discussion about gold being a safe haven today. Bitcoin, not so much, folks. Those two charts. Bitcoin trading dramatically lower. You hit 34,000 and change. Right now, we're down $2,000 on the dot, down 5.3%. You got gold spiking higher, up 2.8%. We reached 1976. We're trading at 1964 right now. Silver's up 89 cents at 25.49. We got commodities going wild. Many different commodities going wild. Look at, excuse me, palladium. Up 10%, staggering. You jump to notes and bonds, right? Higher prices, lower yield, a rush to safety, folks, out of the markets. Can't overstate what's going on here. We're going to jump around, but man, these are some wild moves. I'm going to start off with the NASDAQ 100. We're trading at 13,145. We make it down to 13,025. So we almost get a 12,000 handle in the NASDAQ. You put this thing on the weekly, folks. Interesting area. Coming down to the 382, and that is the full COVID acceleration. Folks, that's a backtrack of a move that was over 10,000 points. You traded from 6,600 to 16,700. You traded 10,100 points higher, 10,150 almost to be exact. And we have pulled back a 382 of that move. And that 382 correlates to an area. Early last year, you found a bid. May of last year, you found a bid. And we're coming down to very close to an area remarkable. August of 2020, folks, we're only 500 or 600 points away from that price level in the NASDAQ 100. Amazing how quickly you give it back. But interesting on the chart, we're talking about the 382, 12,912 in the NASDAQ. S&Ps, you're talking about 3,800. You want to get down to the 382 level of the move it had from 2,100 to 4,800. And we take a look at the Dow. And out of curiosity, let's see what we're talking about in the Dow in terms of where we are retracement run from the full run we've had in COVID. You're just back to the 236. 382 brings us under 30,000 in the Dow. All right, let's jump around to some of the headlines, and there's going to be the headline of the day. Russia invasion of Ukraine ignites European security crisis. Now, I'll say here as well, internationally, of course, over in Europe, you get the markets down dramatically right now. The DAX was down more than 5% at one point, I think. Let's jump around right now. You got the DAX right now sitting down 4.6%. FTSE down 2.8%. CAC roll down 4.4%. Over in Asia, you have the Nikkei down 1.8%. Yeah, those are going to be probably closed numbers maybe as things escalated. But we're talking about a yield right now of 1.87%, the yield on the 10-year. Boy, no matter what you look at, the moves are pretty remarkable, folks. We take a look at crude, right? You're talking about barely a pullback. That's a weekly. Let's put it on a daily. We look at the full run it's had since it started back in December. Remarkable. December, folks, crude was trading at $62. We just got 100 print. The price of crude, boy, if you're ever in like an A to B, C, D, formation, man, that A to B leg, you could be talking about an A to B leg from 65 to 95, and you could be talking about $120 oil, folks. And guess what? We just traded up almost $10 in the span of 24 hours. So 120 is totally possible with everything going on in Ukraine right now and the war. All right, where do we start? Let's jump around to the other economic number, not too dramatic in terms of what we're dealing with in light of the war going on in Europe, but jobless claims, 232,000, slightly less than expected. You get a Q4 GDP revision to 7%. Jobless claims, 232,000, continuing claims, lowest level in nearly 52 years. Check that out, right? GDP, 7% annualized pace in the fourth quarter, closing out a year with the strongest growth since 1984. And there's your initial unemployment claims, folks. Seems like basically since November, we've kind of just settled out at a number oscillating right at around 200,000, pretty healthy number. You look at continuing, the trend is still negative in that market in terms of, at least in that data. Continuing claims, 1.48 million, a decline of 112,000 from the previous week, and good for the lowest total since March 14th of 1970. The total of those receiving benefits through all government programs fell by just over 30,000 to 2.03 million. Do you remember how big this number was? When the pandemic was just beginning, it was like 20 million, 30 million people, because what would happen was you'd roll off the state rolls, you'd then be on the pandemic unemployment insurance program, et cetera. Nonetheless, we're back at about 2 million. Despite the improved jobs picture, total employment levels remain about 1.7 million below where it was in February of 2020. So think about that. We're 1.7 million people employed less than 2 years ago. And that's at a time that we're supposed to have 2 years of growth there. We're supposed to have 2 years of population growth and economic growth. So we're not supposed to just get back to those levels. We're supposed to get above those levels if you incorporate the 2 years of growth that we've had over that time. Unemployment rate fallen from a pandemic peak of 14.7 to 4%. And on the GDP, we get, upward revision. Initial reading of 6% was in line with market estimates. That brought full year growth to 5.7%. So in light of everything else going on, market not going to really care about that number. The Fed will come back in focus, hopefully, as in if things don't escalate too dramatically over in Ukraine right now. But it's a pretty bad deal, folks. They're a democratic nation. They're an ally. They're a NATO ally. And unfortunately, Putin is going for a land grab, and it seems like he's going for it in more dramatic fashion than many were basically thinking. The mainline thought seemed to be that maybe he would saber rattle a little bit longer, right? Just be in there causing anxiety a little bit longer and not quite the full-scale onslaught that we're seeing potentially throughout the entire country, and not just the two separatist regions that it began with. And yeah, markets, man, you're really reacting. Now, what I will say here, folks, is that, yes, this is going to put a hurt on oil prices, right? That's going to hurt inflation even more. We're going to pay higher oil prices if you get a war going over between Russia, the Ukraine, European allies, et cetera. That is going to cause rising oil prices. It's going to cause inflationary tendencies. It's going to cause higher prices for the world. Could cause economic recession. Definitely possible when you talk about everything else in play. But what I will say is in the long term, folks, some equities, you're getting pullbacks that might be irrational in some of those equities, especially looking for a longer term investment horizon. We'll take a look at some of them later in the hour. But boy, you've had some pullbacks already in some of these equities, and they're pulling back this morning. Stay tuned, folks. We'll be coming back with our man, Kevin Hincks. Should be an interesting conversation. We'll be back in 3 minutes. Stay tuned.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com. educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We get the S&Ps down an even 100 points right now. You're talking about 2.4% in the red. Quite a pullback from 4,800. And look at that, 4,800. January 4th, 4,800. We're pushing 4,100, just like that, coming into February 24th. NASDAQ down 385 points, 2.85% right now. Not sure you'll get a huge bounce today, folks, as fear and selling maybe at a height right now. You may see some margin calls today as things really escalate. And as I said, you're going to be getting into some pretty lofty levels on lower price when you talk about the pullbacks we've already had, and things are going to get exacerbated even further to the downside on the opening bell, to say the least, as we all know. Bitcoin trading down 35,435. You're down $2,200 on Bitcoin. You know, Bitcoin is not the digital gold, folks. It's coming to fruition right now. Bitcoin very correlated to the market, which may give it some staying power in the future, but not digital gold in any way. We're seeing it play out today as Bitcoin taking a beating, down 6%, and that's after bouncing $1,200 off the lows. You jump over to gold, up $45 at 1955. You were as high as 1976 on that gold contract. All right, let's jump around to some of the equities. We do have some equities with earnings this morning getting lost in the shuffle of the geopolitical events taking place. But Live Nation, they are positive. Let's jump over. Let's see if they're holding on to those gains, even with the market getting decimated. Yeah, not so much, unfortunately. They traded higher last night, but when the market gives it up on war, everything gives it up right now. You got Live Nation. And this is a good lesson, though. You know, everything is going to give it up because prices are getting recalibrated, right? But you're going to see prices for good companies that might be lower than they deserve to be. Now, Live Nation, let's see. Better than expected quarterly revenue, already sold 45 million tickets for 2022 events, even as ticket prices rise substantially. Folks, it's happening. I was saying, you know, the world is breaking out. The country's breaking out, at least. Concerts, travel, leisure, any of that stuff. Let's see how SeaWorld did. 92 cents a share, well above the 29 cents estimate. Revenue above forecast, doubling a year ago. Park visitors spending more per person than they had prior to the pandemic. This is going to be a constant theme, folks. I'm experiencing it myself in terms of spending. I tell you, I joined Busch Gardens for the year for annual passes this past weekend. We went Sunday. And so you get annual passes for the year, but then you buy some quick queue tickets that just last for the day, right? Well, we hadn't been there in 2 years, folks. We showed up. We got 2 quick queue passes. We went on like 3 rides. It seemed like an irrational spend, but guess what? We hadn't been there in 2 years, so I wasn't too worried about spending a little bit irrationally the first time out at a park to make sure we got the full experience. You're going to see it playing out more and more. And let's pull up SeaWorld. So Live Nation, they're going to be a little bit lower, even with strong numbers. SeaWorld, boy, they got a bid ask that's pretty wide right now, 62 by 70, but you're going to open almost flat for their numbers. All right, let's go to Jose in Lakeland. We got a question and a caller. Jose, great to hear from you, man. Good morning. What's going on?
Good morning. Hey, I woke up this morning, got my paper, and opened it. It looks like 1938 Germany. Napoleon Bonaparte is on the move.
Yeah, some tough deals, man. Hopefully, worst case scenarios don't play out, because not a good deal for sure.
No, he definitely wants to go back to Soviet Union.
Listen, Russia, Russia is not a world economic power. They have some power, man. They're a nuclear power, but they are not a world economic power. So that's the scary thing, that, part of the play could be, Russia's ready to flip the board over, man, because they don't lose out when they flip the board over, because, the board isn't too kind to them right now, and the economic, there's a lot. So it's a scary deal for sure, man. The poor people of Ukraine, humanitarian-wise.
Ukrainians consider Russians their brothers. They don't understand this. I'm wondering if this has more to do with Joe Biden.
Some do, man. Some don't. Just so there's not all people in Ukraine that are, voting for their president over there, see Putin as their brother, man. There's plenty of people.
Huge consolidation down to the August of 2020 levels. Do you think the market is going to languish for a couple years?
It's possible, man. We came in. It's like, boy, if you're doing like history lessons, Jose, and I know you know it, man, because you're all over this market, you're looking at it. But it's like, if you go back to the levels we were at in 2008, and you run from 660 to 5,000, right? It's like in the final year of that, you finish with a 27% run. At some point, you got to pause the engine, and we saw the multiples on some of these growth stocks, man. It wouldn't be the end of the world if we chop around for a year or two to catch up. It really wouldn't. I was saying, in just chats talking about investments. Yeah, this is a tough deal in the long run. Things will probably be fine, assuming worst case scenarios don't play out with what's going on in any scenario, man. It can always be worst case scenario. But that could be a year or 2 or 3, man, because the run has just been so fantastic. I mean, if you had just said, Jose, man, right, we go back. We came into 2020 at 3,200, man. With everything we've been dealing with, we're almost 1,000 points higher in the S&Ps over 2 years,
That's right?
Yeah,
I agree.
The companies are making money. All right, the companies are making money. The companies that have carried the indices higher are making money, man. So it's important to remember that. But it's also important to remember where we were, where is possible. And I have the S&Ps up here. I mean, a 382 retracement of the run we had from the COVID lows is 3,800. What's wrong with going back there, man? If we get back to 3,800, then we're 1,000 points above the highs. And maybe it takes us a year or two to get back to 4,800 or 5,000. I mean, if you're a trader, that's probably a good thing, man, because we have some volatility. And if you're an investor and you have a time horizon that you can ride out a little period of consolidation or negative action right now, hopefully you realized if you were coming into 4,800 in the S&P that there might be a pullback, and if there is, you either were ready for it or you were ready to go a year, 2, 3 years to kind of get over that hump that's possible. That's the way I was looking at it.
No, I agree. So if you're a 401k holder, I'm not, but someone out there, many people are. Sure. Are they going to be shell shocked when they see? Well, that's not a good term to use, shell shocked. Are they going to be unpleasantly surprised when they open their statements in the next couple months?
They probably are, man. I mean, this is quite a pullback, especially if you're anywhere near the NASDAQ. I mean, you're talking about NASDAQ. We're just dropping 4,000 points, man, in the NASDAQ 100 from 17,000 to 13,000. And we are almost back to August of 2020 prices, which is just mind-blowing considering the run that it had last year. So, yeah, but hopefully if you have that type of exposure in your account that you don't need the money right now, right? You have a plan at least where you're taking the money out of the next X amount of years. Maybe it's 10 years or 20 years. If you're 55, 60 years old, man, and you got 20, 30 years going where you're going to need that money, I wouldn't be that worried because we got inflation, man. You got to have that money working in the same way. You know, that's what you got to consider, man. If you're 60, 65, yes, you might be retiring, but we got yields at basically nothing, and we have inflation at 7%. I would be much more comfortable trusting my money to the market and or real estate, you know, and risking some pullbacks, man, as long as you have the time horizon and you have the ability to be taking that money out every year you need it. But you got to have your money working, man. We got 7% inflation. It's like, otherwise you're in trouble if you're just putting it in,
well, that
negative.
Tiger financial deal is looking sweeter and sweeter at 7%.
Listen, if you don't need the money right now, man, and you got investment, you know, everything above the risk-free rate has risk to it, folks, but contact my dad, check it out, because that's 7%. I tell friends about it, Jose. I do, man. If you don't need the cash for the rate you're receiving above the risk-free rate, I think it's a great deal, man. Thanks for the call. So great to hear from you, Jose.
Yeah.
Take care, brother. We'll be right back.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. It's going to be an interesting opening bell, to say the least, right now. The S&P is trying to find out where price supply equals demand, and right now we're down 2.6% right now in the S&Ps. You got the NASDAQ 100 down 3.1%. The Dow off 2.6% right now, accelerating Dow off 851. Let's put it on a short-term basis. You see, I mean, these markets chopping around basically since 10:30 last night, right where we are, and you're pushing right near those lows like right now. You take a look at the NASDAQ 100, pretty similar action, right near the lows we were at 2:30, right near the lows we were at about 10:30 last night as well. We jumped to the VIX. Is that the VIX? Yes, it is, I think. 33? Yes, it is. 36, the VIX. 36.79. There's a spike for you on the VIX. We jumped to crude, $6.85 in the positive at 98.95, and we jumped to that gold contract right now, up $45 on gold, and no tin bonds. We'll finish out the roundup. Positive by about 24 ticks right now. Checking out the yield on that 10-year as we're positive by 24 ticks. 1.89% right now. DAX back negative by more than 5% right now. CAC Carol negative 4.3, FTSE negative 3.1. Circuit breakers, 7% is the first area that would have to hit for circuit breakers to hit. Hopefully that's not the case. We are still far cry from 7%. Don't think that'll happen, but man, it's possible anytime you get this type of instability going on. You know, it's interesting. I was jumping around to some of the stocks that have really gotten hammered lately, right? And Roku is down 2.8% right now, okay, but you're above where we were even last Friday. Some of these stocks, folks, yeah, DraftKings is a little bit lower as well, but you look at some of these stocks now, yeah, you're down 4.6%, okay, but you're $2.70 above where we were trading at the beginning of Tuesday. Some of these equities, you're down dramatically, but you're not at lows, okay? Maybe that means that we've had lows put on some of these equities that have gotten pummeled. I mean, if you see this market, let's just say the NASDAQ 100, right? Let's say the S&Ps. Let's say the S&Ps are going to trade down another 10%. We're going to trade down to 3,800, okay? 10% or more. I'm not sure you're going to see all of the companies that have gotten decimated trade down multiples of that. It's possible, folks. I mean, but you're dealing with, I talk about it, you know, you're dealing with now DraftKings, $7.6 billion market cap valuation. Some of these companies, yes, you can get down to $4, $5, $6 billion. But I would just keep it in mind, folks. I had Restoration Hardware. Look at this pullback, okay? You're right at the 618. From 744 in Restoration Hardware, you're right at the 618 of the entire COVID move, from $73 up to 74. You consolidate for a while, you pull back to 347. I would begin looking at this equity. There's a bunch of ones. All right, let's jump to it. Some of the other equities are on my radar. Target. I talked about Target sitting right near the 382. Well, not so fast. We're coming to the 50%. And I would put Target 157. You get a pullback in this market, man. You deal with multiples. Target at 157. I would love to get me some more Target at 157. Let's jump to Facebook. Now, Facebook is its own animal. You're playing with fire in this equity, but you're now at 193. The multiples on this equity, it's going to be bananas, folks, in terms of what they're dealing with PE. This thing is a one-way stop. Now, what's interesting is here. You take a look at this daily, okay? Now, remember when Facebook got cut, that they came out with the earnings, shocked the world, from 325 down to 240. And one of the things, that was one of the biggest market cap losses ever in the history of the market, okay? When they came out with that, I think they lost like $200 billion in market cap, something silly. And everybody's thinking, okay, is this the buy, right? It's at 240, my goodness. You got Facebook at 240 down from 380. They kind of threw the whole kitchen sink at their last earnings. But what I brought up was, which was interesting, is you back things up, folks. The last time Facebook got demolished, okay, this was one of the biggest market cap losses ever as well. The week of July 23rd, there was a day, I'm not going to pull it up on the daily, but there was a day that had destruction, the likes of which we had when they came out with their earnings a few weeks ago, Facebook. What was interesting was it wasn't over. You then traded from 175 down to 125, okay? You lost 30 to 40% more. But once you find a low, Facebook almost doubled in share price from 123 to 225 over the next year. Now, Facebook traded to about 240. Let's put this back on the daily to get the full context here. You traded to about 240 the day after their earnings. Well, you've lost $45 since then, folks. You're off almost another 20% after that one-day loss. Okay, you might be getting to an area, folks, on Facebook. If you want a Facebook position, I would begin scaling in at this price. You're at 193. You back things up to a 5-year weekly, folks. We're almost at 2017 prices. You're getting 5 years ago prices on Facebook. Call it 4 years ago to be fair, because you really are getting 4 years ago prices. January of 2018, 195. February of 2022, 194 on Facebook. But it's an interesting lesson when you look at it. Most of the times when you get a huge sell-off like this, the max pain is not in yet. That's what's happening here. You trade down to 240. We're now at 194.5. You've traded down another 20%. I don't see an area that stops this, though, on the chart. Maybe you make it down to 137. But I would begin scaling in if you want a position in Facebook, because these are the companies, folks. You buy solid companies that have earnings. You know, Facebook could spend all their money on the metaverse. It's possible. I don't imagine that's going to happen. They still have very profitable brands. Instagram, WhatsApp. I think Facebook is horrible for society, okay? So you want to make the moral case. You don't want to invest with Zuckerberg and what he's doing. I completely get that one. But from a PE investment standpoint, with the volatility going on everywhere else, yeah, I would say you could start looking at some of these equities. That's why I brought up Target as well, man. You're at 186 from 268. How about Home Depot? Folks, Home Depot's a solid company. You're down another 1.4% from 420 to 303. Lowe's. With their numbers on Wednesday, strong numbers. You give it back yesterday with the market, you're down to 210. Even Lowe's, when you take a look at the pullback, you're talking about a 20% pullback from the highs you had last year in Lowe's on that equity as well. And yeah, some equities moving in big fashion. Moderna, they had their earnings after the bell this morning, actually, I see, to 145 from Moderna with their numbers. And let's check back into some of the stocks that are moving. So let's just pull up Live Nation and SeaWorld, because these are two companies. Is that it? Look at that. They catch the pop. Yeah, these travel stocks, folks. Market catching a little bit of a pop as well. Yeah, you don't want to be an international airline right now. Delta down 5.5% right now. Let's look domestically. JetBlue still down dramatically. Southwest, yeah, all the airlines. Cruise ships. I mean, this is another one, folks. You know, if you're looking at some of these cruise ships right now, you're down 5%. I don't imagine Carnival's cruise ships. Yes, they might be paying higher oil, but a war between Russia and Ukraine, I'm not sure it's going to hit Carnival. Yes, it's hitting the market overall, but if you believe in that company, you're getting it $19. I'm not sure how you believe in Carnival, but you get the point. There's haircuts all over the place right now, and if you're going to be picking some companies that are going to come out stronger, I mean, this is quite a deal. Look at the weekly on Airbnb, man. Whew, this equity. They came out with great numbers, folks, trading at 190, and just like that, you can get Airbnb at 143. Growth stocks just getting decimated. Salesforce is a great stock. You open a 184 right, just like that. But hey, you know, we're not going to throw out everything with the bathroom.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps down 89 points right now. And just to go over those circuit breakers, don't imagine they're going to get hit. Hopefully not. We got the S&Ps right now down about 2%. First level is 7%. And that halts trading for 15 minutes if the drop occurs before 3:25 p.m. Eastern time. Level 2 is 13%. You get another 15% stoppage of trading if the drop again occurs before 3:25. And then the last level is 20%, and that's regardless of the time of day that it happens. All trading ends for the day, 20%. Hopefully we don't see that, folks. That would, not likely. Just wanted to bring it out. So you're talking about 7, 13, and then 20 would be the final number. You hit any of those in the final 35 minutes of trading. Okay, no, let me bring this over exactly because it's an important distinction here. Let me blow it up. Circuit breakers. At or after 3:25, trading shall continue unless it's a level 3. So they don't pause it in the final 35 minutes of trading unless it's the level 3. You hit 20%, it's done regardless. But they don't pause it in the final 35 minutes of trading. Interesting how that shapes up. All right, other stocks going down the line in terms of what we have going on. Alibaba, they are trading lower. You trade to 102 pennies. Man, that's, I mean, you talk about having not having seen this price in a while, folks. You're going back to early, look at this. You're going back to prices, folks, October of 2014. October of 2014. You just could have held Alibaba for 8 years. Think about how the world in China has transformed from 2014 to 2022, and you made no money being in Alibaba. They're out with their earnings on top of the market getting decimated. They trade down. They pop on the open a little bit. I got the S&P selling off again right now. Wayfair, they're down almost 10%. Wider than expected quarterly loss, pressured by double-digit decline in international sales. Jump over to Wayfair. They're catching a little bit of a pop on the open. You put this thing on a 3-year weekly. Talk about getting ahead of itself. Yeah, now this equity, very different scenario. When I put equities into two different distinctions, folks, especially if you're trading 401k retirement type funds. Does this company serve a role in society that no other company can fill currently? Wayfair does not fill that in any manner. There's no reason why this thing can't go bankrupt. Quite the rise from $21 up to $369, $350 early last year, but it's been a one-way trip for Wayfair. Restoration Hardware, similar. They don't have to be around for a while. But man, this is a much stronger stock in my opinion, and they're perfectly aligned, folks. High end, okay, is going to be much better off in the long run with everything going on right now. This pandemic, unfortunately, it was a pandemic of those who have and those who have not. And you saw it with the job sector. You saw it with the ability to work from home. You saw it with the appreciation of real estate assets. You saw it with the appreciation of market assets. High end home decor, etc. Yeah. I mean, you're back to the 618. 618 is 330. You traded this morning to 346 on Restoration Hardware. We're trading right now at 349 on Restoration Hardware. Papa John's, better than expected profit and revenue. Profit margins improved, even in the face of increased cost. No guidance due to related uncertainties of COVID-19. I think that's a cop-out, man. Any company not providing guidance 2 years into the pandemic, but they like the numbers. They trade down to 81. Maybe that conference call saved them up to 106. There's some interesting action for you for Papa John's. You put it on a 3-year weekly. Interesting to say the least. Bookings. Quarterly earnings, 1583. Market was looking for 1364. Meaningful improvement in current quarter bookings. Periods this year when COVID-19 negatively impacts travel. Down 7.6%. Bookings. Let me jump over. Boy, look at this pullback this week. Is that right? Yes, it is. This is bookings, right? Yes, it is. Yeah. Let's put it on a daily to get the full pullback. Down 10%. You drop from $2,500. You're down $260 per share from $2,700 on this equity. So yeah, the market not liking the fact that they are telling the market that COVID's negatively going to impact travel, at least to them. Interesting. I see it happening the other way, folks. I mean, there's going to be winners and losers, but you get the right company, man. We're breaking out. We're breaking out for a period of years, not a period of months. All right, let's jump to some of the FANG stocks, see how we're trading. Amazon down 1.5% right now. You're looking again at Amazon, man, 2,800 down from 3,700. You look at this full run. You just came back and touched the 50% in late January. Almost right back at that area again on Amazon at 2,800. You're almost getting $1,000 cheaper than you were back in July, and you are back to where we were trading on Amazon in June of 2020. You're talking about what, 20 months ago on Amazon prices? Some of these are remarkable. Microsoft shares. There's a strong company with a pullback for you. Microsoft down 1.5% right now. You take a look at the full run Microsoft has had. Let's take a look at the retracement levels. Microsoft nearing the 382 as well. 267 is the 382 of the full COVID run from 131 to 349. Microsoft within about $10 of that area. That'd be a nice area on Microsoft, 267. Maybe you could start to nibble. And again, these are longer term, folks, okay? I would not be adding full positions right now. I mean, NASDAQ's at the 382, folks. But again, like I was talking to Jose in Lakeland, it is very important to understand the concept of where we have come from, folks, so quickly. All right, whether you just look at where we were 2 years ago in the S&P, we're at 3,200. That's not even taking into consideration the run you had from 660, 665.75 to 3,200. Okay? Yeah, there's 3,200. We go from 660 to 3,200 over the period of 2008 to 2020, and then you jump another 1,700 points over that time. Folks, it wouldn't be outlandish to get the type of pullback for 3,800. Okay, it wouldn't be outlandish to see a 618 to 3,200. We just dropped 700 points almost in the S&Ps in the span of about 5 or 6 weeks. I don't see it happening, but you're going to see some forced selling, folks. You're going to see it happen, especially when you have the type of carnage going on. I mean, look at the flyers here. Look at NVIDIA, down from 346 to 220. If you're in margin on NVIDIA and you're buying it anywhere near these highs, hopefully you weren't, because that was getting pretty lofty. But you see, you're talking about, I mean, 175 would be cut in half on NVIDIA. You're trading at 220. Right? They were talking about AMD over in the YouTube Tigers Den from 164 down to 110, just like that on those shares. Remarkable pullbacks. But boy, this market, folks, here we go. Let's see what happens. We're coming up to a critical area. 4 a.m. Eastern time, you had a high of 41.64. We're trading right now at 41.49. Boy, you traded up. You're talking about 45 points. We just traded up since the open. Let's put it on a 1-minute chart to see the acceleration. We open right near the lows of 41.09. The market pushing higher, 41.51 right now in the S&Ps. That's down just 1.6%. And look at the NASDAQ, down 1.3%, folks. The NASDAQ just traded up 250 points as we are accelerating higher. At some of these companies, like look at Salesforce, right? You're up 1.3% right now at Salesforce. You just traded up $12 right now on Salesforce. Yeah, Roku just traded up almost $10. You're Broker just traded up almost 9%, folks. You opened at 110 and you're trading at 120. Better have fast fingers today. Stay tuned, folks. We'll be right back to finish up the show.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got all the markets catching a little bit of a bid off the lows right now. You're talking about the S&Ps, negative 1.5%. You check it out on a 5-minute basis. We just hit a price level of 41.62 in the S&Ps. Folks, you're talking about more than 60 points. That's about 1.5% off of the lows that we had last night in the market. NASDAQ right now off about 1.4%. NASDAQ was off more than 3% near the open. Bitcoin down about $2,000 right now. We jumped to some of the commodities. Crude, pairing some of the gains. Look like the market calming a bit from the moves it had early this morning. You had crude up to $100. You're trading at $96.95 right now. You had the gold contract was up to 1976. You're back to 1934. All the moves still pretty dramatic, but a far cry from where you were. Even look at notes and bonds. 10-year was up to 127.11 as this market's clawed back. You've seen selling in notes. You've seen buying in equities. Man, the day is young, as our man Basil Chapman says, folks. He's coming up next. We got live programming going on all day at TFNN. And we got markets in turmoil, to say the least. S&P's down 76 points right now. We jump over to the VIX. You get the volatility index trading at 3471. We jump around to some of the other equity as I was looking at this morning. Tesla shares. How about a 6 handle? 691 early this morning. And you actually got a print of 700 exactly, I think, for the daily bar. Let's check it out, do we? 700. Our man Basil Chapman. Basil, give us a little Tesla take during the program coming up for the Tiger Technicians Hour. How do you like that $700 mark for Tesla shares? And you talk about it, folks. How about almost all of the run back from August? All of it from August almost on Tesla shares, from 643 to 1243. And just like that, we're back to $700 on Tesla, now trading at 751. And we'll jump to some of the other stocks as we wrap it up. Netflix shares this morning down about 1%. Restoration Hardware down 2.5%. Yeah, you're seeing some volatility. It's going to persist, folks. Really interesting to see which stocks are finishing in the positive right now, as you got Salesforce up 1.8%. Look at this. You just trade from 181 to 194. Excuse me. It's going to be a wild one, folks. Stay tuned. We got Basil coming up next. We got Larry at 11, Fast Market, Kevin Hincks, Tom White, the team at TD Ameritrade Network at 12. We got Steve Rhodes at 1. Dave White at 2, Tom O'Brien at 3, and Basil's in the den. He's ready, folks. He's coming up next. Stay tuned. Have a great Thursday.